The probabilities from an Elliott wave point of view are higher to look for a bigger corrective structure compared to a continuation of the bull market, and in this video I will explain why that is and also cover the different Elliott wave scenarios, starting with what you see here on my chart, which is a bigger double zigzag, a three-wave structure, after which you then look for all-time highs. Wave W is a zigzag ABC, wave X internally is a WXY, with the final wave Y being a zigzag ABC, and then you look for another ABC to the downside to finish the yellow Y. Most common target area for the yellow Y is 61.8 to 54.5K. It is the 1 to the 1.236 trend-based fib extension taken from the start to the end of W to the potential end of your wave X, which I currently put at around 92-93K because of some interesting resistance that we have over there, which is the blue box, 92.4 to 93.4K. However, before you would get to that box, we do have the highs at 88.8K and also a point of control at 90.3K, so please keep those levels in mind as well. You can also see the red Fibonacci here on my chart, and that is the 0.7 Fibonacci taken from the start to the end of wave W. Preferably, your wave X is not going to touch the 0.7 Fibonacci, because if it does, it will significantly lower the probabilities for this particular scenario. You can also see a couple of vertical lines on my chart, and these two over here with the number 1 and the number 2 are taken from the start to the end of W to the potential end of your wave X on the 29th of April 2025. And that sounds very specific, but it has to do with GON. And Samith in Discord is a very talented trader, Elliott wave analyst, and also studies GON, which is very impressive, very difficult as well, and has to do with time. And this is an important time pivot from a GON point of view, which is why I have it on the chart. Now, if you use these three pivots, then your target area for your wave Y would be between the 7th of June 2025 and the 17th of July 2025. Then we go to the second scenario, which is a bigger zigzag, a 5-wave A, 3-wave B, and then look for a 5-wave C to the downside. Wave A in this scenario is a diagonal 1, 2, 3, 4, a 5-wave structure, and then inside wave B, you preferably look for a double zigzag WXY because of time. Preferably your wave B is ending at least after the 0.382 fib time taken from the start to the end of your wave A. And the 0.382 fib time is sitting on the 6th of May, 10 a.m. Central European time. But what you can see is that this move to the upside is relatively short. We're not even close to the 6th of May, so it makes more sense to then have an ABC to the upside in a wave W, finish that around again the 29th of April, which would be nice, then get your wave X to the downside. Do not touch the 0.7 Fibonacci that you take from the start to the end of your W, and then look for another wave Y towards the upside. After wave Y, and therefore after wave B, you then look for a little bit of a grind and an impulsive structure to the downside. That is your wave 3. These are your 1-2s. Then you look for a couple of 4-5s to finish your wave C. And wave C has to take the low of your wave A. Finally, we have the diagonal, a 5-wave structure to the downside. And then we want to see a retracement back towards the upside. Invalidation to the upside, 90.1K. To the downside, 69.2K. Wave 4 has to be a zigzag family structure, either counted as an ABC to the upside or a WXY to the upside. And then you want to see an impulsive move down, corrective structure to the upside, and then another impulsive move towards the downside for a wave 5. That would be a simple ABC zigzag. Alternatively, of course, you can have a double or triple zigzag. A double zigzag would be impulse down, correction, impulse, another correction, and then you get another impulse, correction, impulse to finish your wave 5. And now we get to the bullish scenario, which will make it very clear why the probabilities are higher for larger corrective structures compared to continuation to the upside. First of all, if we want to end the corrective structure at the low, 74,420, one of the scenarios is a triple zigzag WXYXZ. But a triple zigzag is a very rare corrective structure, generally not preferred till other structures start to fail. But maybe even more important is this one over here. The 0.236 Fibonacci is an incredibly rare Fibonacci support level for a wave 2. Most common for a wave 2 is the 0.5 to the 0.786 Fibonacci, generally a minimum target, the 0.382. And the 0.236, well, I only remember it happening twice, that a wave 2 touched the 236 and then moved up in a wave 3. So it does happen, but the probabilities are not on the side for it to happen. And in the end, we only can use probabilities in trading. There's no certainty. So from a probabilities perspective, this range here, being a wave 2, low probabilities. Higher probabilities that this is part of a corrective structure instead of an impulsive structure. However, if the move of the low is a higher probability corrective structure, it immediately increases the probabilities for the corrective scenarios that I have just covered. The FEC price only retraced to a 0.236 Fibonacci increased the probabilities for a bit of a deeper retracement. However, after price created a three-wave structure here and then started moving to the upside, the probabilities changed. And I like to show you my thought process. Hopefully you learned something from it. So over here, this is in silver. This was at 10 p.m. And I write, as price moved up and overlapped with the white line and now touched the 618, an impulse down has low probabilities, right? So you have over here the potential triangle. I get to that in a second. But then price here overlapped with the white line and it touched the 618. So an impulse down, low probabilities, which means a multi-1-2 becomes your next like bearish option. Now then I also write, bullish, well, the running triangle from a little while ago, which is something I mainly posted in silver, I think at the beginning of the weekend. I didn't really show this on YouTube, but an A, B, C, D, and then a wave E to the downside comes back to mind, as well as a potential flat structure. So after the triangle, you look for continuation, and the flat structure would still lead to a deeper retracement in then a WX, ABC in Y. If price moves above 85.4K, a multi-1-2 goes out the window, which is your final bearish scenario, basically. And that is what happened then over here. 85.2K here is touched, right? That's the 886. If you would count this as a 1-2, 1-2, and then 3 down, then the 886, very rare target for a wave 2, so you didn't yet take out these highs of this little range, but the 886 was enough to turn around probabilities anyway, and therefore it increases the probabilities for price to move towards the upside. So that is how you can read the local price action of last night, which then impacts the probabilities and therefore gives probabilities to the bulls, and we got this nice move towards the upside. But I guess the story of this move to the upside is mainly about, there we go again, a grinding structure to begin with, quick move to the upside, and now we slowly start ranging, and what we're going to be looking for is a bit of a grinding structure to the upside, and it is even nicer if you eventually keep grinding to the upside, touching some of the resistance levels. If you want to learn more about this very, very basic Elliott wave like usage, I suppose, then check out this video here, right? It will be linked at the end of this video as well. Now, we do have some news this week. I don't really expect fireworks though. Thursday, April 24th. So just make sure you trade safe, right? Maybe it can increase the volatility, but maybe it doesn't. And then we have the probabilities as explained at the beginning on the higher time frame. A bigger corrective structure looks better than an impulsive structure to the upside and a continuation of the bull market because of the 0.236 and the WXYXZ. We will, of course, follow along with what price is doing locally, and if the probabilities change, then you will be the first to know. I hope this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting, and on the right is the Elliott Wave educational playlist to help you better understand Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.